Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in tonight's free video I wanted to review some ideas with you on Alibaba. We've been talking about this name for a couple of weeks now. Essentially it came to light, or came to interest to us, when we had this last daily squeeze, and we were able to take a trade off of this prior to the earnings revision that sent it higher off of this move right here. So this is what, if you weren't paying attention to it when this first squeeze started to form, this probably caught your eye, and typically moves like this are something that you want to pay attention to for an opportunity to buy the next pullback. Now we're looking at my intraday moving averages on this, but what I'm always referencing in these bullish aggressive moves is the 8-day exponential, and it's come down and been very closely holding it. We'd have one spike lower, but then the point where it starts to become of interest again is when you have another daily squeeze. So these signals started to form towards the end of last week. We were looking at them off of some smaller intraday charts, and that's where you start setting up this other work as well. So the 4-hour had a squeeze before the daily did once again, and all we're looking at in this situation to help us map out areas of support are the pullbacks that are relevant to what we've seen before. So we're looking at this saying, okay, these pullbacks are very similar to the pullback that we're going through here, and that helps create a confluence of support with a retracement of this low to this high, and you can see how all of those levels came into play back down here in this zone. So we know that we like the daily for the reasons we've covered. We get the pullback down into a retracement zone that we like to focus on, and then you come back down into either the 15 or the 39-minute charts. We were discussing the differences in entering these from an aggressive versus a little bit more conservative standpoint. The aggressive entry would have come in right in here. The conservative entry comes in right more, you could look at it essentially the same way. This break of these highs would have gotten you in, and you would have stayed in because you didn't take out the lows. But if you didn't get it on this move, now we have an intraday squeeze to back the idea as well, and now we can look for a push to new highs. So we've positioned ourselves with some shorter dated put credit spreads that will expire this week, some longer dated calls, so ideally we will be in the position when we make the push through the all-time highs, and then we'll have an ultimate target on that at the 1272 extension at 152.42. So I hope that helps, gives you a couple different ideas on how you can get into these and places to be trading this week, and we'll see you at the next free video.